Hello and welcome to the Stock Planner channel. Tonight I want to talk about swing trading, and I want to talk about QCOM, which is the technical stock. Technical stocks don't do well in inflationary markets, yet I'm recommending it as a buy. Gas station, it used to cost me $50 to fill my car, now it costs $75. Is that inflation? Every time I go to the grocery store, it costs me more money. And everybody knows the price of lumber has been going up. Now it costs 3 times as much to build a deck on your house. Do we have inflation? I believe so. Now most tech stocks will go down during periods when we have inflation. It puts downward pressure onto the price, especially if these stocks, and a lot of the technical stocks are, overbought or overpriced or overvalued. But in this video, I'm going to tell you about one stock that I think is a good inflation hedge, and it is going up. This channel is an education channel dedicated to help you trade better. I'm not a financial planner, but you can learn a lot from me and from the others that are participating on this channel. Tonight's video, I plan on telling you what inflation is and why I believe it's here to stay for at least a couple of years. I will tell you which sectors will perform best, and we will analyze the stock I picked for you. Maybe you'll consider putting it on your watch list. Are you prepared if we suddenly have a lot of inflation and there's some job losses? But still, no matter what the market throws at us, we can still make some money, and I believe we can make money on this one. Let's get started. The first statistics I have for you is from the U.S. Bureau of Labor Statistics, the website. They're showing a 12-month change, and energy is just really taking a jump. Food that's grown, and all items have risen about nearly 5%. So that means to keep pace, and especially with investing, you need to earn at least 5% on your investment. And that's not to mention what your taxes will be paying. So this is going to be a tough time. And inflation does put a downward pressure on price. The stock market doesn't like it, generally. The next statistic is from Statista, and this is the annual interest inflation rate all the way up to 2026. It's predicted relatively low, but here we are in 2020, 1.25, then it jumped. I believe the inflation rate will be much higher than this. Still, it's not all that terrible. Quickly, this is from the Fed economic data. Lumber prices rising, then jumped and spiked. We all know that. That's what inflation looks like. And this is another factor that can cause inflation. The unemployment rate. There's the COVA. Back down. Is this going to spike? Are people going to go back to work? You want to see inflation. Let's stop creating new jobs and having people not go back to work. You'll see inflation. Everything was green today. All the indices ended up green, and we had a green day, especially for the big boys and in the tech. And the financials all did well. Energy normally does really well during a inflationary period. Can't read anything into this, but technology and consumer cyclical areas and communication services all are areas where they're not going to do so well during inflation, and they didn't do as well as the other areas. Let's take a look at one last statistic. This is a market watch chart, and it's the correlation between energy and the industrials based on its correlation with the PPI and CPI inflation indexes. And during inflation, energy is doing well. Some financials didn't do so well, but didn't so bad either. Some technologies stocks did well. Real estate does well in inflation because your real estate prices go up. And utilities do good. Communication services, consumer discretionary, and consumer staples do not do well. Electronic equipment does do well. QCOM is a maker of chips, and I think the chip makers are going to do well during the inflation, especially if they're making chips for 5G and Internet of Things, which QCOM is. Consumer finance does okay. That's PayPal and Visa and oil and gas. This is interesting. Rail and metals doing okay as well. Especially retail, all those get hit. Beverages, packaged food products. So I'm going to be referring to this chart several times. This is great. It's very interesting. Bank of America has recommended these 8 stocks that fight inflation. AMD, chip maker. Qualcomm, chip maker. natural resources and oil. And this is a fertilizer company. QCOM is a semiconductor stock focused on advanced broadband technology. It's gaining market share and expanding in some areas as in radio frequency front ends, automotive technology, and the Internet of Things. This is why I think Bank of America ranking as an inflation stock is valid. The technology will progress during this inflation period, even if we have a recession. It's not going to stop. The Internet of Things is a happening thing for this next decade, and that a technology advance will continue, regardless what our economy is. 71% of the Internet of Things in automotive sales, so they're spread out. And the Bank of America has a buy rating up to $200 price target. Now remember, tech stocks are not always that good in inflationary periods. TipRanks is another tool I use. It's free, and they have a paid version too, but I'm currently using the free version. And Qualcomm is trading at 133.96. They're saying 171. Remember, Bank of America 200, 171, 172 here. It's given it a ranking of 9. That's really good. The hedge fund activity decreased. We don't like to see that. We like to see things come in, especially for buying. But we're swing traders, and so we're going to try to buy on the dip. And when we want to get out, maybe possibly short term, maybe as little as 18 days, or as long as 18 days, and maybe as little as 2 or 3 days, take a small profit. Back to FinViz, which is a free tool as well. It had a high in February and has been on a downslide since. FinViz has a target price of much lower, 171. That's comparable to TipRanks. This stock is shortable, optional. It has a buy rating. It's profitable, and it trades in a large amount. Looks like there's been 2 downgrades around April. In June, is Qualcomm a buy based on the global shortage? Probably. Another tool I've been using is Simply Wall Street. And even though I'm a swing trader and we do most of our trading decisions and make most of our trading decisions based on technical indicators, you got to know a little bit of something about it. And then we are in some tough times right now. So this is called the Snowflake Flake analysis, and it shows the strengths of this particular stock. It has good performance in the past. It pays a dividend. The health of the company is generally strong. It's trading below its estimate of fair value. I'll show you that in a minute. Earnings are going to grow by 5%. That's reasonable. Nearly 100% over the past year. It has some debt as a problem. The nice thing about it is some similar companies, and all 3 of these are on my watch list. And this is showing the strength of it. And the object is try to get one that has the circle filled in. They're all about the same. Intel's, let's say it's good value. Broadcom. These are all have the same amount of area. You know, they have their different strengths, but all 3 of these, or 4 of these companies are great. Current price is around 133. Fair value is 165. So you can buy between that. Remember, Bank of America says it's going to 200. That's in here. There's 19% based on its fair value. It's undervalued based on its fair value. You probably can't go wrong. We're going to wait, though, and get it a little cheaper. As I said, future growth is 5.3. And this is a nice tool because reading balance sheets is not my forte. And I like to see the graphical representation of those spreadsheets and balance sheets. It's making it a lot easier. Now, I'll let you know how I like it over the next couple months. But looking at the executive summary, dividend looks good, past performance looks good, and the health of the company is basically good. But Dave, he just went over the trend of the market for today. That's fundamental stuff. He did some fundamental analysis about price targets, the health of the company, whether they're paid dividends, all that's fundamental stuff. You looked at the news, fundamental stuff. But you also said that swing trading is 75% technical and 25% fundamental. Swing traders try to predict these peaks and valleys in order to make some money, or these ones, the minor ones. Well, if you could do that all day, that's the job of a swing trader. And you do that by looking at charts and indicators. This is a MACD. This one here is the stochastic RSI, and this one is the RSI. That's the 4 indicators that I use. This is a free charting package. You get 3 indicators. You have to pick one that you don't want, but it's a great starter package, and you can do this. They don't really hide a lot or hold back a lot. Great starter package, and it's free. And the paid version, which is about, I think it's about $100 a year, $120. It's not expensive at all. This is the MACD. It's below the 0 line. That would have predicted that very well. It's stochastic RSI. It goes below the 20 and comes back around. That would have predicted the same thing. That you would have made money. And the RSI coming back around below the 30 and coming back around, that would have predicted a day earlier. Made you some money. This is the RSI. It's not quite, did not hit the stochastics. It didn't quite go below. Looks like it's, both of those are coming and swinging around. But the MACD is still pointing down. Green candle today went up 96 cents. For those that believe in the 50% retracement theory, where when you have these peaks, it retraces back 50%. We had a run up. We draw our fibs from the lower to the higher. A lot of people think it will get to the 50% and then go again. I believe this week we'll have some turbulence. So I'm going to try to buy at 130 to 131. Long term, 2-3 years, this stock is going to be higher. Short term, 3 to 18 days, I believe if you got it for 130, it would climb back up to 134 or 136 or even 138. That's a decent run. It pays a dividend, you buy the stock, or you can trade options on this. If it does come down, try to find an option spread for this to stay above 130. I like QCOM. It is involved in the Internet of Things and 5G. That is the way of the future. I think companies that are involved in 5G and Internet of Things will have a staying power. It's a major corporation spread out in other industries, cars, and other technologies. TipRanks says it's going to outperform. Simply Wall Street says it's a good company that has some value. It's trading 19 or 20% below its intrinsic value. If you can buy it below 133, you got yourself a bargain. So put this on your watch list. Are you a buyer at 131? In the comments below, put 131 or the price that you buy at it. Please like and subscribe. Do your own due diligence. This guy, he followed what everybody said on the internet, including Wall Street Bets. This guy did his own due diligence. But remember, you shouldn't listen to anybody from the internet. You don't know where they're coming from. So do your own due diligence. Don't follow advice from this guy, but certainly you can learn from him. Again, like and subscribe. I need to get more eyes on my video, so please help. Catch you on the flip. Happy trading.